Lansing is trading with gains of around 0.3%.
OPEC has today taken a decision to circumscribe its own production by 100,000 barrels.
The data to watch from here on is the FI data in F&O.
Morgan Stanley has come up with a very interesting report on the tire stocks. They're positive on the market as a whole.
50 points higher on the Nifty now.
India and ASEAN, which have outperformed significantly this year.
Dreams of going international as well, but 62% higher.
Value of loans disbursed now stands at 4,517 crores, up about 484% YOY, and from about 2,100 crores in the previous month.
Anyone who is traveling from the airport and using their credit and debit card at the lounges. So this program is incubated by Dreamfolk. So we are the one who actually started.
Earlier on, we had said in July that government and LIC both together could be looking at offloading around 65% in the IDBI backed this investment. Given to understand that probably that number would be closer to around the 60% mark.
We have seen a sharp recovery from the lows of the day, so the Nifty is sitting with gains of 40 points as we speak.
Good afternoon and welcome to Closing Bell. I'm Anuj. With me today is Nigel, and of course we had a very interesting day, Nigel, today. Yesterday was a trend day. In a sense, market gapped up and then straight there through the day. Today also we had a gap up, but after that the market saw a big decline and then a recovery as well, but not near the high point of the day. Of course, the financial Nifty has weekly options expiry today, so that has underperformed today. Normally it outperforms, but the financials slight underperformer today, but no sort of problem for the broader market. The mid-cap index up 2/3%, and the advanced decline also has been quite okay. So let's see. In fact, the Nifty mid-cap is now closer to all-time highs than Nifty. Who would have thought that was possible when that correction was taking place? But that's how the small cap and the mid cap space have moved. Nigel, hi.
Well, Anuj, and today there was reason to think that maybe the markets are going to see a bit of a downtake, because in the first half we were below that 17,600 odd mark, but that didn't happen. So that's giving you a bit of a texture of the market, at least in the near term. The buy on dips is really playing out. And from the day's low, in fact, we're up close to around 120 points odd. Let's see where we go from here. But for the time being, well, the bulls will be pretty happy. A bit of consolidation, a close in the green, that's something they'll take with both hands. First up, though, let's run you through what all we have lined up on the show for you. Tire makers, they surge as demand bounces back with a series of auto launches and the easing of supply and inflationary pressures. Details on the sector coming up in just a bit. And the market gives a big thumbs up to the new listing today. India's dominant airport service aggregator platform, Dreamfolk's services, listed at more than 500 rupees, which is more than a 50% premium to its issue price of around 326 rupees a share. Key excerpts from our chat with the management in just a bit. We'll also discuss the way forward for our markets with market expert Merbun Irani, Neil Bahal, founder and CEO at Newgen Capital PMS.
But first up, as always, we start the show with last hour calls. What should you be doing in terms of index and individual stocks? We have Mitesh Thakkar joining us with closing strategies. Mitesh, hi, good afternoon. So, your thoughts on the day's trading action? It's once again buy on dips played out, but the first rally also got sold into today. So how do you approach it now and your stock calls?
So this is still, as I said, contracting market. Therefore, the declines are getting bought into and the rallies are getting sold into. So I don't think we still have a trend signal. Broadly, try to maintain the strategy of taking profits close to about 17,750, 17,800 zones, and buy around 17,450, 400 levels. So that's the way we'll approach it. Shriram Transport Finance is the stock on my radar today. I think that's given a good price and volume breakout. So that's a buy. Keep a stop below levels of 1355 here. Look for targets of 1450, 1460 on the upside. And Tata Power is another one. That's also a good price and volume breakout action taking place over here. That's a buy with a stop just below levels of 239 for targets of 256.
Okay. All right. Mitesh, thanks a lot for that. Well, let's welcome market expert Merbun Irani, who joins us on the show today. Hi, Merbun. Thanks so much for joining in. Well, quite a few stocks moving around. Mid-cap index outperformance. That's something that's heartening. Wanted to ask you about, this theme that's playing out, consolidation of the cement stocks, and will there be some kind of merger, acquisition, or something on those lines that will play out? Case in point being a Sanghi Industries. Just around 45 days ago, the stock was at around 30 rupees. Today, it's at around 60 rupees. You have a couple of other names like India Cements as well that's moved up big time. Keep in mind, first quarter results were very disappointing. Second quarter is likely to be more disappointing. Do you buy that theme? That yes, that could be consolidation? If yes, what are your picks in the mid-cap and small-cap index? Go ahead.
I think I've been positive on the cement sector for quite some time. In fact, it's one of the few sectors where I've been positive on. It's a real constructive story over a period of time. If one believes that India's infrastructure is going to go on picking up going over the next 2 years. And I think among the mid-caps, I've always liked Dalmia Bharat. The point is the stock has also performed in the recent past. But today, if you ask me, and if you permit me, I would say that I would like to possibly target or mention about a little bit of a frontline stock, which maybe the management, Holcim, had not done too many things and being aggressive. They lost a little bit of market share, and I'm referring to Ambuja Cement. I think if you ask me to single out one stock today, which I would possibly buy despite being a little bit uneasy as far as the overall market goes, I would say Ambuja Cement stands out by a mile vis-a-vis the others in the sector. I think the ownership change is almost complete. There should be a cost savings with Adani's taking over. There should be a cost savings of roughly around 170 to 180 rupees per ton. There should be better growth visibility. The intentions have been clearly spelled out that over a period of time, which could take a few years, I think they want to reach a capacity of 100 million tons per annum. I think the present capacity is around 31 million tons per annum. And if you look at the PE difference between, say, Ultratech, which is the leader, vis-a-vis, say, an Ambuja or an ACC, you will understand what I'm trying to say. As soon as a capacity expansion is seen happening, maybe a Gautam Adani or somebody from the group will address the analysts in the next 15, 20, 30 days and will spell out plans. I promise you, all the analysts, irrespective of which brokerage house they belong to, will go back to the table and prepare a report upgrading the stock. Now, honestly, I feel it's a no-brainer. It will take its own time because capacity expansion takes its own time. We have forgotten the fact that Ambuja as well as ACC, I think, are sitting on cash, which alone will help them increase capacity by a few million tons. So all said and done, this is one stock which I will single out in the entire space while being positive on the overall space also. And I still believe in the mid-cap. I still like Dalmia Bharat for maybe at least a couple of ₹100 more, but I would prefer to see a decline coming in some of the stocks. So there are recent reports stating that price increases are not happening now so easily, I think. And we are also now coming to the end of the monsoon season, so maybe the next quarter could be better than what we are going to see in the September quarter. So I think this is the space to be in. There are stocks to be bought into, but I would say that Ambuja right now stands tall in this entire pack.
Okay, Ambuja stands tall in this pack. Just looking at some more names in the market, and there's of course quite a bit of more in the individual mid-cap names. Let's just see some of them in the broader market. Gen Irrigation is making a bit of a move, 5% higher on that. Sri Renuka Sugar is the other one making a higher move, 8% higher, by the way, in Sri Renuka Sugar. Let's just pull out a chart of Sri Renuka. In fact, large volumes also being traded on that one. Merbun, hi, good afternoon. Any view on Sri Renuka Sugar or any other stock that you may like in this space?
I think sugar also is one sector which I've been positive on, but the part is that over the last 2 months, the stocks have come up quite sharply. I think they are making a decent move today. Is it a turn of fortune as far as the shareholders goes today? Honestly, it's a little too early to call, but there have been recent reports which state that a center is going to allow 8 million ton sugar exports next season into Tranquees. Maharashtra sugar mills are also seeking export policy for next season, and there could be a slight dip as far as sugar output goes in 2020 to 23. But bigger story is the alcohol story, the ethanol story. So I believe that sugar, you should have at least one good quality sugar stock in your portfolio. Of course, the good quality when I'm saying, I think Balrampur Chini stands out again. There should be a stock which you should possibly have it at least for the next 1 to 3 years, because I still believe sugar is a great structural story. As far as Sri Renuka Sugar goes, there is a lot of noise around this stock as to a lot of corporate developments can also happen. So it's not very easy for me to possibly come out and state in the open as to whether Renuka would be a good bet or not, because we all know that this company was one of the companies which had a lot of problems in the past. But the moment is good. The stock could go up further. But if I were to buy something, I would go with Balrampur Chini at number 1, maybe Adampo Sugar at number 2.
Okay, all right. Stay with us, Merbon. For the time being, let's focus on the new kid on the block. It was a strong debut for Dreamfolk Services. The company shares listed at a more than 50% premium. Let's listen in to what the MD of the company had to tell us on the way from here on.
We have also integrated our systems with the airlines and the OTAs. So in case if anyone wants to even buy a lounge voucher, while booking the ticket, they can also do the same. So these are the differentiator what we have created in the market, and I think that is one of the biggest plus point. And not only that, we started as a lounge aggregator platform, but today we are an airport service aggregator platform. All the lounges have different pricing, okay? So if you actually see the Metro City pricing is higher, the domestic lounges rates would be different to the international lounges. So on average, if I would say that if the pricing is around 100 rupees, what the banks or the card network would pay, we would keep around 15%, and the rest we pay to the lounges. In terms of the margin, I would say that because of the volumes, the way it's increasing, that's how you would see the difference. But we have always maintained that, and we would continue to have the 15% margin for us. The EBITDA would remain at 12%. I'm talking about the gross margin which is there. So that is at 15%.
Okay, very strong listing. Merbun, your thoughts on this one, DreamFox?
I think better listing than what I had expected, I think. And at this present price, while I would say that the business looks seemingly good, I would not be in a hurry to either buy this stock or recommend this stock.
Okay, not buy or recommend this stock. Merbun, so what are you buying right now? Any interesting stock idea?
I would say, Anuj, let's be very honest about the fact that nobody, and I say nobody, I think really knows that's what's going to happen in the markets tomorrow. I think we were talking of US markets, now we are looking at US futures and trading virtually every minute of the day. I think we all have heard enough, stating that US dollar index, inflation, slowdown, Europe going into a comma, US likely to hit recession, India relatively better, India will stand tall. But the point is we also appreciate and accept the fact that valuation-wise, I think India is definitely absolute-wise as well as relative-wise, we are expensive. So what should one do in the market? I think you go and buy some frontline stock, you very well know you are possibly buying it for the next 5-10 maximum percentage on the upside. You very well know one day we will fall. Now 95% among us, and it could include you and me also, Anuj, that we believe that TK, whenever it's going to fall, we will see what has to be done. But there could be a big cost as far as reacting to what the markets will do before us. So I am clear on one simple thing, it's a bottom-up approach. Go and buy into companies whose valuations are not very expensive, even now, and which we are doing well, and which will possibly give you positive returns over a period of time. Buying into expensive stocks and saying that, oh, look at the way the market has punished this stock. No, the point is you did a mistake by buying expensive stocks. So there are a few stocks here and there which look attractive. I think I mentioned Ambuja was one of them. If you ask me in the FMCG segment, I am looking at a company and I personally like it with clear disclosure. I'm looking at Patanjali. I think Patanjali should be a no-brainer for a 1,500 or 1,600 rupees coming for the stock in the next few months. That's my personal view. So there are interesting stock ideas here and there which I'm giving clear disclosure that I'm liking it and I'm buying it for myself.
Merbun, any view on Suzlon? Out of nowhere that stock has moved from 7 to around 11 rupees. Surprised everyone. Your view on the stock, if you have any?
Honestly, no, I think. But there are stocks like Suzlon, which I've always stated that I like to put a small percentage of my personal money into such type of stocks. And if I were to identify one of them, like Vodafone, people are talking about Yes Bank, now people are talking about Suzlon. But I'm relatively more comfortable with a stock called Dish TV, which despite everything, the point is the management has at last gone out. There are a lot of contingent liabilities. The new management will come over, possibly work on them, and one fine day, I see, now this is my personal feel, that one fine day this company will be sold off, so maybe a Bharti or a Tata Sky or Reliance Jio, we really don't know. So I think at 16, 17, with an EBITDA in the books, a decent EBITDA, I think this stock could end up possibly giving better returns than the other names which I and you possibly discuss or talk about every passing day. I think you remember what had happened to an Eveready. I think when Khaitans were in charge, there were a lot of problems in the books. We all knew that the company was not being managed well. They went out, Dabur management has come over, Burmans and taken over, and look at Eveready today. Can the same thing happen to Dish TV? Maybe not. that much in absolute terms. But at 16, 17, 18, if I were to take a chance bet in one of this type of stocks, I would go with Distribuate at number 1.
The view on Eveready, by the way, from these prices, 350 rupees, it's been there for a long time. Would you be positive from here on as well? As you said, if you got it at lower levels, you're really lucky. But now that promoter change has happened, view at 350, Merbun?
I would say yes. I think this stock, I will not be surprised, Nigel, and I'm personally holding this stock from lower levels. And I've added when at last the news came out that the Burmans were coming in. I think the problems as far as the debt goes, the defaults goes, I think possibly is history now. The management over the last 2 quarters has worked on the books, has cleaned up the books, and now I think there is no problem as far as Eveready goes. The question is that the stock has gone up a little bit too sharply, well consolidated, it looks a little bit expensive. But if you ask this question to yourself, is it not an FMCG stock? Virtually Eveready is available at every second retail store. So I think if somebody comes and talks about you should be getting an FMCG stock valuation, I think then you know what can happen to the stock. But even otherwise, if the stock is at over 500 rupees over the next 18 months, honestly, I will not be surprised.
Okay. Merbun, stay on. We need to take a break. We'll come back and take market action forward with Neil Bahal, founder and CEO at Newgen Capital PMS on the other side of this break.
Welcome back. Some kind of profit taking is what we're seeing from the higher part of the day. A couple of larger banks have seen a bit of a downtake. That's HDFC Bank, SBI Bank, Axis Bank as well. And they account for a large chunk on the Nifty as well as the Nifty Bank. So all these 3 banks should come up for you. That's why the Nifty has now moved into flattish terrain from being up closer around 35 points or thereabouts. But the sector that's buzzing around is tires. And tire makers, they are surging as demand bounces back with a series of auto launches and the easing of supply and inflationary pressures. Stocks like CEAT, Apollo Tyres, both of them have hit 52-week highs. Sonia is with us to run us through all of those details. Sonia?
Well, most tyre stocks have been hitting 52-week highs like CEAT, Apollo Tyres. In fact, JK Tyres is also just 10% away from its 52-week high. Now, what are the reasons for this rally? The most obvious reason, of course, is the pickup that we've seen in auto demand because of the slew of new launches. Morgan Stanley put out a report where they said that the tonnage for tyres will go up by 11% on a compounded basis from FY21 to FY25. Apart from that, there is an improvement in sales of SUVs and commercial vehicles, which are high-margin products, and hence that will result in more tonnage and better operational efficiency for the tyre companies. The second reason is that raw material prices have now become supportive. Both natural rubber as well as crude oil prices have fallen significantly from their peak. Crude oil prices are down 20% from their peak in June, while natural rubber prices are down 17% from their peak in November. And remember, both crude and natural rubber form 90% of the raw material costs for tyre companies. Now, the third reason is that there is a big wave of premiumization in the tyre companies. All the new auto OEMs or the new vehicles are using premium tyres with better safety features and advanced technologies, and companies like Apollo, JK as well as CEAT are specializing in this, or rather focusing on the premium segment. In fact, Apollo in the year 2021 launched Redistine tyres in India, which is the premium segment, and those tyres are 40% costlier than Apollo tyres. Hence, this focus on premiumization is also aiding the tyre companies. Finally, let's take a look at the valuations for these companies. You have CEAT, Apollo, MRF that are trading at about 20 to 30 times FY23, and MRF is trading a bit expensive at about 24 times FY24. The cheapest of the lot is JK Tyres, which trades at about 9 times FY24 and 16.5 times FY23. Back to you.
Got it. Thanks a lot for that, Sonia. Well, Merbun, what's your take on some of these tyre stocks? What would your pick be?
I think it's a fact that they have worked under very challenging times over the last maybe one or two years, I would say. And if you ask me, honestly, I think unless input costs rise from current levels, it will be decent enough to improve that margins will improve further going ahead. I think let's give marks to the tire companies for really being very disciplined as far as pricing goes. So I would say things look certainly good for them going ahead. And even if you had asked me the same question maybe a month ago, I would have said that I prefer the auto ancillary companies. I prefer the tire stocks ahead of the auto majors as far as on a relative comparison. Now the pointers at the all-time high or around the 52-week high, certainly, I think, do you go and buy into them? I would say, why not? I think if you're an investor, you can certainly go and buy into them. If you're a trader, possibly you could wait for some correction to happen here and there. And if you ask me, the best stock in this pack at the moment, at the present price, while I'm holding MRF, I would like to state at the present price, I think Apollo Tyres looks to be the best bet. I think the debottlenecking happening in the Hungary plant should add capacity further. So this is the company which could possibly leverage its increased capacity without spending too much on increase. There should be no capital cost for them, but the capacity will go up because of debottlenecking happening for the company. So at the present price, I still believe that Apollo Tyres is one stock. If I'm a trader, despite the slight rally with the stock has seen today, I would go and buy into it. If I'm an investor, possibly I'll wait for a decent correction to happen. And even then, I would say that Apollo Tyres relatively is a better bet than the others as far as valuations go.
Merbun, we will thank you on that note today. Thanks a lot for joining us. Jay Bala is our next guest. He is joining us now to discuss some market technicals. Jay, good afternoon. Thanks a lot for joining us. The Nifty has been outperforming most of the markets, and especially the US market. Your views on where the index is headed now?
Yeah, hi Anuj, thanks for having me on the show. The rally from June looks incomplete if you look at Nifty in isolation. But if you look at Nifty compared to what the US markets have done, there is a possibility that the June rally may have peaked in August, and the next few days are going to be crucial when the US markets come back from a long weekend, and we're going to start trading today. We're going to see what the market is going to do. So if the Nifty were to break 17,166 and 17,000, I think the rally from June has peaked. If not, we have one more higher high coming through, which will take out 17,992, and then the markets will turn lower. That's the working thesis at the moment.
Okay, all right. Hi, Jay. What about the Nifty Bank? If you could give us a couple of levels out there, it appears it's hitting into a bit of a resistance zone.
Yeah, it's running into a little bit of fatigue. The key resistance is about 40,300. The markets have come very close to it, and it's struggling there. But it's not yet a turn down. But as long as the index stays about 38,200, I would still consider that it's still trying to take out that key resistance at 40,300 and probably push towards the all-time high made in October of last year. And but if the markets were to turn below 38,200 and 37,900. I think the rally is done. Until that point, we can stay long within the banking space. But it's selective pockets. SBI and Icici are the leaders out there.
Jay, what's your view on dollar index and crude?
Yeah, dollar index has to consolidate at current levels. If it doesn't consolidate at current levels, I think the possibility of the dollar index stretching to 113 is a distinct possibility. More important for India is that Asian dollar basket, which is the other dollar index. That's below the pandemic low, and support is somewhere close to the 2004 levels. So it's probably heading towards a 20-year low. And if you look at the Chinese yuan, that's saying that it's probably heading higher, which is the biggest contributor, the Asian dollar basket. So so that's a key variable here. When it comes to Brent, I think Brent is in for a sizable decline. But personally, trading Brent has the last few times has been very choppy, and I've been stopped out on my trades. So I would think the Brent is headed for somewhere closer to 70 in the medium term. But that's not bullish, because that's probably coming out of loss of demand, destruction of demand, rather than improvement in anything else. So if the Brent were to go down, it's not positive.
Okay, all right. But the dollar index moving to 113, that's something that the Indian bulls will be fretting about a little bit. Let's see where that's headed. But since we're talking about other asset classes, we have forgotten the Bitcoin for a while, Jay. Do you think that's headed lower? If yes, where?
Yeah, that's true, Nigel. And Bitcoin shouldn't have gone below 20,700, but it has. And it looks like it's heading towards somewhere close to 15K, probably even 14K. But from a broad sense, Bitcoin is an indicator of risk on, risk off. The fact that it's going down, that may not help risk on sentiments and in turn the equity markets. So slightly negative out there.
In terms of stocks, Jay, any 2 or 3 ideas that you want to leave us with?
Yeah, I think the FMCG sector is slightly, seeing fatigue and probably turning lower. If the FMCG sector falls below 42,000, that will drag the sector into a correction. So I have a short over there from the FMCG space. Godrej Consumer, the decline from last year to March lows made this year is looking like an incomplete move, and the bounce from there is looking like a corrective bounce, and it stopped just short of the 61.8 retracement. So a stop about 945 with a short objective of about 810. And if the medium-term assessment is correct, it will probably go below the March lows made in 2022. So take it one step at a time, 810 the short-term objective, medium-term below the March low. And I have a long call on a cash stock, KEC projects, RKEC projects. It's looking like a breakout from a rounding bottom and a consolidation of the base. So potentially heading to 72 with a stop below 41 here makes a lot of sense.
Okay. All right, Jay. Thanks so much for stopping by and giving us your view on the index and a whole host of asset classes as well. But let's invite our next guest. We have Neil Bahal, founder and CEO at New Gen Capital PMS, who joins us. Hi, Neil. Thanks so much for joining in. Good speaking to you. First time I think we're having you on the show. If you could tell us, I was looking at a couple of updates that you put out there, and in the last 3 years or so, it appears that returns have been pretty good for your, all your clientele. Has there been a bit of a slowdown now, or is there enough enthusiasm at around 17,000 on the Nifty, if you compare it with what it was in the early teens?
Hi, Nigel. Thank you for having me. Yeah, you're right. This is the first time I'm on CNBC. So it's a pleasure to be here. So, in terms of slowdown, I don't see any slowdown. The way things are going, I think India is very well placed. And what we are doing is, anyways, we don't have a view on the stock market. We typically look at companies and we try to buy them at discount valuation. We are a special situations fund. So for us, looking at the market doesn't make any sense.
Okay, fair enough. Neil, hi, good afternoon. That actually works for us because, if that means, you can talk about some stock ideas. I'm looking at your PMS. Piramal Enterprises stands out. How have you looked at the listing post that demerger? Because a lot of people thought that maybe the fair value was around 1,200, 1,300, but the stock's been struggling a bit.
So it's very interesting. Special situations work very differently in the short term, and the value creation happens in the long term. So, think about it. Generally, the people who bought Piramal before the demerger, the idea was that, the pharma business is the desirable business and the NBFC is a good business, but the pharma is a better business. So what happens typically post a demerger is the people who got one share of NBFC and one share of the pharma, the way people work is the behavioral finance is such that people would want to hold the pharma and people would want to sell the NBFC. So I agree with you, the fair value should be much higher, but this is a period of adjustment where the people who don't want to own the NBFC would be trying to sell out of it. So you're pretty cool. Before the demerger, when it was trading at 1,600, it was almost as if, the holding company discount is going to go away. And that has gone away. And now in the NBFC, the value discovery process is going on.
Neil, what about this QSR theme? I see Sapphire Foods as part of your top holdings as well. The street is pretty excited about that. There seems to be a valuation mismatch, so to call it as well, between Devyani and Sapphire. Give us some more rationale about holding Sapphire in your portfolio.
So, first of all, we own all of these stocks and they're not investment advice. We're just discussing the overall rationale. So QSR has completely changed. I can tell you one thing, how you begin to work on the QSR space. Think about it this way. India is going to sell more burgers every year for the next 25 years. Okay, so the runway is huge. Now, when you look at the sector and look inside, you want to look at companies which have a very high return on capital on a store level. So when we did the analysis, KFC stood out much ahead of something like a McDonald's. It stood out much ahead of something like a Burger King. And when you do further analysis, KFC and Pizza Hut have two different franchises. One is Devyani and one is Sapphire. Now, the only thing why we wanted Sapphire in the portfolio more than Devyani is because Sapphire valuation-wise is much cheaper. I think there were some issues with Sri Lankan operations. That's why the stock price was not performing as per expectations. But I think now that that situation normalizes over time, I think the valuation gap between Sapphire and Devyani should narrow going forward. That if you're absolutely right, Nigel, the gap is too big to sustain, and that is what we are thinking in our PMS. Is that while the earnings growth will be very strong in both Devyani and Sapphire going forward, but the valuation gap in Sapphire means Sapphire stock going forward, at least the hope from our end is that the valuation re-rating should also keep happening on Sapphire.
Actually, it looks like you really like this space. In the unlisted space, I think you're Burger Singh as well. that name is very interesting. I just Googled it, and
even I did that.
Yes.
Yeah, so yeah, we are very bullish on the QSR space. And I'll give you an example. In 2004, two companies did an IPO. One was Google and the other was Domino's. And while the world has celebrated Google as one of the best companies in the world, and in fact it is true, the stock which has done better than Google at the same IPO time has been Domino's. The Domino's stock has returned a 7,000% return versus a 4,800% return for Google. So what the US was in the QSR space about 20-25 years ago, I think India is not even reached that base yet. So the growth potential in India is tremendous. And because of this pandemic, the delivery portion of overall revenue has gone up for QSR. And that has improved unit economics amazingly. So earlier we had a very good runway, but the unit economics were not so good. But suddenly today what you have is, while the runway continues to be good, as I said, India will sell more burgers every year for the next 25 years. I'm pretty certain of that. But at the same time, the unit economics will keep improving. So I think it's a one unbelievable opportunity. India provides great opportunities across the board, but I think QSR is one of those ideas which have to be top of the line for me.
Okay, all right. What about, in this sort of a market, you need to be careful about the broader market themes. But as you're saying is, you're not really worried about the headline index. You're looking at bottoms-up stock picking. And I'm looking at a couple of companies in there. Tips Industries, a couple of other names, Coastal Corporation as well. Since you're talking stock specific with, your disclosures as well, could you tell us what's the rationale on both these two?
I think these are the smaller companies, so let me not talk about them more in detail. I'll tell you about the sector in Tips Industries, for example. About 20 years ago, Tips and Saregama, these two kind of companies, you would think that, they were having a very tough time running the business. Or no one pays for buying music. But recently, again, the rise of the internet in India and the rise in the internet globally has completely changed the business model for these guys. They are no longer trying to sell their music. All they have done is just uploaded their music on YouTube. And every year, YouTube itself grows. And because of that, they have natural tailwinds. And the beauty of the business is that these are the tech companies which are highly profitable. The return on capital is at 80%, 100%. So they are cash cows, basically. They're churning out so much cash every year. And it's a kind of the music catalog they have, that there's no competition. There can't be a situation where tomorrow a private equity backed player comes and says, I'll burn money. They can't, because the songs that they own for the next 60, 80 years. So it's an absolutely beautiful business model backed by the fact that the internet itself is expected to grow over many-fold over the next few years. So we love these kind of businesses.
Okay, yes. Tips for 90s used to dominate the music industry along with T-Series. So that's on music. What's interesting is, looking at some more names. In the NBFC space also, you've taken a couple of bets, Chola and Ujjivan.
Yeah. So, both of them are from different perspectives. Ujjivan, that not a lot of people have made money, but we looked at it from a special situation standpoint. So what we did is, first we had a view on the entire sector. So we went and we did scuttlebutt. We spoke to all the players who are unlisted. And we got one simple idea from everyone, is that the microfinance industry has kind of bottomed out. This happened a few months ago. And when we got that basic view on the sector, we started looking at the sector opportunities. And as you know, we want to do something where we have a margin of safety in terms of special situations. So Ujjivan had a situation which was very amazing, where the holding company is there and an operating company is there, which is a small finance bank. Now the holding company is set to reverse merge with the operating company. And when that happens, you have a at the time, at least when we bought, there was a lot of margin of safety. There was a 40% arbitrage basically. Then for us to be wrong on Ujjivan, we had to be wrong by more than 40%. So while we had a good view on the sector, we had that margin of safety in terms of this reverse merger. So Ujjivan is kind of like a cigar butt opportunity where we don't have a view beyond 2 years and 3 years. But Chola, on the other hand, is an amazing story. And I feel, it's a transformation story. Being a normal NBFC, the Murugapas have been able to kind of grow the business at a 30% CAGR for the last 10 years. And now they're going from being a normal vehicle finance kind of a player into a fintech. Now, when that kind of transformation happens into a business, the valuations will also re-rate. So again, whatever we do, we look at from the point of view from earnings growth on the one hand and valuation re-rating on the other hand. Whenever you have this valuation re-rating working for you in your portfolio, you can create alpha. So the view for that we had on on Chola was that on the one hand, the earnings should grow 20%, 22% for the next few years. And on the other hand, the valuation will start re-rating as a fintech. It should start getting better and better valuation every year.
All right, Neil, good speaking to you. Thanks so much for stopping by. As you said, you're bottoms up. You're looking at stock specific. You refer to yourself as maybe going for a bank auction and trying to buy assets that are below the value that you believe. Good speaking to you. Thanks so much for joining in and giving us your inputs on a few of the stocks that we did discuss. Well, for the markets, we're holding more or less flattish. Now we've moved mildly into the green. So we'll slip into a short break. On the other side, we'll get your check into what dealing rooms are saying. Nimish will be joining us in D-Street Chatter. Our technical experts as well will be joining in.
Welcome back. Well, the market's seen some consolidation today. It opened with a bit of a gap up in the first 15 minutes. After that, some profit taking. And after that, the market's been sort of consolidating a bit. Good time to get Nimish in D-Street Chatter. Nimish, tell us what's been the feedback today.
And the feedback is there is a lot of interest in the broader market. So that's where the larger outperformance seems to be. Yes, on the Nifty and on the Bank Nifty, there is a bit of consolidation. But again, unlike yesterday when the feedback was the FIs are the better sellers, today the feedback is that there is going to be buy flows from the larger FIs. In fact, within that, there is selectively buying into the financial names. So some large financial stocks are well bid by the larger FIs is the feedback. From a technical point of view, while everybody is talking about the Nifty range between 17,200 and 17,800, I believe that the index to watch from here would be the Nifty Bank. Even today, if you see, there is a bit of resistance around 40,000 levels on the Nifty, Bank Nifty. If that's taken out, you'll see a big move in the Bank Nifty and in the bank stocks. So that's where the orientation seems to be, and there is buy flows as well in the financial names. But broadly, day of consolidation. But there is a lot of outperformance and interest in the broader markets, especially in the mid cap and small cap.
All right, Nimish, and what about stock specific? What are you watching out for?
So in terms of individual names, the first stock is Zomato. Been consolidating around those 60-odd levels of late. Even today, the feedback is while the stock is flat, there is good amount of buying interest from larger FIs. So a couple of large institutions are seeing very large buy flows in Zomato in today's trade. So that's the first one. The second stock is Bandhan Bank. Again, a bit soft in trade today, been consolidating between 280, 285 levels. But in Bandhan, the feedback is, it looks like some selling from a larger FI seems to be getting over now. For the last few days, a couple of US-based funds were active sellers, and looks like that's getting over very soon. So that's Bandhan Bank. The third stock is Tube Investments. That's been a big surprising move in the mid-cap stock. This week, the stock is up 10% on good volumes. And the stock has been a rank outperformer. One of the feedback is, with this move in Tube Investment, this stock is getting likely, as a potential candidate to the MSCI inclusion in the November review. So that's why you've seen a big outperformance in Tube Investment off late. So that's the third one. And the last stock is Hudson Agro. There was a large block, nearly 1.2% equity has changed hands, and in that, I believe one of the domestic boutique firm was a seller. And a large domestic mutual fund was a buyer. But again, a large block deal, and it seems like one of the larger FIs has sold out a big chunk in Hudson Agro today.
Okay, Nimesh, you didn't pick up any buzz on ICICI Lombard?
I didn't add to my chatter list, Anuj, frankly, because I guess everybody is now talking about it. It's a well-anticipated, deal which has been talked about for a while now. In fact, it's got added to my chatter list few times in the past as well. So it's a very so to call an obvious, deal which is likely to come in Icici Lombard very soon. If you look at the shareholding pattern, Bharti Enterprises own 3.7% stake, and that's been widely speculated that a large block will come in from Bharti very soon in Icici Lombard, and hence that has been the biggest loser in today's trade.
Okay, in fact, talking of, Nimesh, thanks a lot for that. Talking of ICICI Lombard, there's a brokerage note as well, which Jefferies has written on ICICI Lombard. Let's go across to Abhishek for more details on that. Abhishek?
Well, Anuj, Jefferies has written on ICICI Lombard they have a buy recommendation with a target price of 1,620 per share. They say that the risk reward is improving with pickup in growth, especially on the top line for the company. So 19% correction has been seen on the stock in last 12 months, which means, that the stock has underperformed Nifty. They are saying that ICICI Lombard is now outperforming private peers in terms of premium growth, addressing a key concern that was an overhang on its valuation some time ago. So they expect momentum to continue as bank assurance and agency channels ramp up. The third-party hike is the upside risk, and they say that the new normal ROE or return on equity is around 15 to 18%. So the stake sale and CEO, succession needs to be addressed over the next 12 to 14 months. They expect a profit CAGR growth of 24% between FY23 to 25. Back to you.
Okay, thanks a lot for that, Abhishek. Well, plenty of stocks actually moving around from the broader markets as well. So there is a fair bit of action. The Nifty, just ignore the Nifty actually. The mid-cap index is up 0.5%. LG Balkrishna auto ancillary stock, not done much actually. It's come numerous times to the 750, 800 level and fallen down. That stock has moved higher. And on large volumes. Amy Organics, that's the other one out there that had a great listing. Stock saw a big correction, but today's price volume action is quite encouraging. It's moved to the high point of the day as we speak. Let's get in Mitesh Thakkar back with us. Mitesh, what are your closing trades?
Nigel, I think on the buying side, Bharti Airtel is closing very strongly, so that's a BTSG. Here I would recommend a stop around 754 and a target of 769, 770 for tomorrow. And the other one is the sugar stock. I think I remember you were talking with I forgot the name of the general, but Balrampur Chini is something, is this come on radar. That's one of the sugar stocks, which is again very near to the day's high. That's a BTSG with the stop below 369 for targets of 382.
Okay, Mitesh, thanks a lot for those calls. Reliance has sort of kept the bulls in the game today. If you look at the chart of Reliance, that's actually doing quite well. So there are some decent gains happening. Neeraj Dewan is joining us as Director of Quantum Securities. Neeraj, hi, good afternoon. Thoughts on Reliance?
Yeah, good afternoon. Yeah, I think after the AGM also, we didn't see a big move coming in Reliance because they're more or less on restricted lines. But then, after the clarity on the succession plan and the capex that they're going to put more capex on the new energy, I think all that for a long term looks good for Reliance. I think Reliance is more or less catching up because the way markets have been doing well, Reliance is more or less still consolidating. So I think a move was due. So I think it's more like a trading move for me. So I think another 100, 200 points on Reliance can be a trading move, but nothing more than that as of now, I think.
All right. Hi, Neeraj. Any view on this other name, GMM Pfaudler? It moved one way, then it saw a sharp correction. The stock is up close to around 10% as we speak. Or, another company from its same group is HLE Glasgow. Any view on this couple of names? I'm asking you about them because both of them have seen a big run just in the last 20, 30 days or so.
Yeah, I think valuation-wise, we had a look at them, but we were not very comfortable. So, at this point of time, when we are looking at, mid-cap stocks or, stocks on the broader market, I think the valuation is something which is more important. So we didn't really find it that attractive. So I really don't have a view of the future course of action in these two stocks.
Okay, well, a lot of individual names being well. Look at Ambuja Cement. It's 4.5% higher on that stock right now. Neeraj, from having valuation comfort, now these stocks, of course, have Adani premium, right? But 436 on Ambuja. What's your view?
I think, of course, like you mentioned, like Adani company now, plus cement as a whole is looking good. We saw good correction and consolidation happening, even the larger names like Ultratech Cement. But I think now towards the second half of the year is when cement stocks really pick up, the activity really picks up. So normally monsoon is the period when you get good opportunities to buy into cement stocks. So I think that opportunity has been there. Ambuja, I think is the earlier one which is really shot up and it's close to 52-week highs. But Ultratech Cement still has a scope, from these levels. So there is valuation comfort, and I think cement activity should pick up towards the second half. So I'm positive generally on cement stocks.
Okay, all right. That open offer as well will close out in the next couple of days. But anyway, the stocks are trading above that price, so unlikely to be any kind of tendering that will come in there. All right. But, if the economy is going to recover, Neeraj, what about these steel stocks? Now, we're getting some news that maybe that export duty of 15%, there could be a relook out there that could give some kind of relief on the volumes front because exports could resume. But otherwise, the sector has seen a bit of a correction, quite a big correction actually from the recent peak. Valuation-wise, would you look at them, or do you believe there's still far more pain because of what's going on in China in particular?
Yeah, the way the prices are correcting, there seems to be that there should be some more pain there. China also, I don't think demand is going to pick up there soon, and there is going to be ample availability, and the prices should stay soft for some more time. And there's some relief is given on the export duty front. I think that may bring some relief to these stocks, and some of them have already moved up also from the lows. I think you need to again be stock specific there. If in the steel, you look at stainless steel, maybe for that matter, Jindal stainless. So there's this valuation comfort, and the stocks are still quite below the highs that they saw earlier. So I think there one can be stock specific, but I think generally there should be some more pain, and especially carbon steel is one space where I see some more pain to be there for the next couple of quarters.
Okay, well, need to take a break, but before that, just today clearly is some sense of profit taking because some of the big outperforming stocks are taking a bit of a knock. The latest is City Union Bank. Just look at the intraday chart of CUB and you will see that move on the stock. FNO stock now, of course, has seen decent gains, but just in the last 5 minutes or so, there's a bit of sharp knock that you've seen. We'll take a break, we'll come back, and of course, we'll address the market closing.
Welcome back. Well, we're down a little bit, down close to around 14-15 points out, but the real action is in the broader markets. Well, we're in conversation with Neeraj Diwan. Neeraj, give us your take on a couple of these FMCG names. Tata Consumer, Britannia, both these two are under some bit of pressure. Would you be looking at getting into some of these names on a dip?
Yeah, definitely. I like both the names, Britannia, even Tata Consumer. I think if inflation is going to come under control, which it looks like it should towards the next 2-3 months, I think then even cost pressures will ease there and the margin should improve. So Britannia should be one, should benefit because of that. And Tata Consumer also, the way consumption is going and the way we see consumption picking up and this opening up, which is still continuing, and more and more people traveling, going out. I think Tata Consumer should also continue doing well. So I like both the names. So if there's any correction because of the market correcting, I think it would be a good opportunity to get into this.
Okay, Neeraj, we'll leave it there today. Thanks a lot for joining us. Good talking to you. Yeah. As always, that's the word from Quantum. Let's do one thing. Earlier in the morning, we spoke to Manichirya Chaudhary. Let's hear out some opinion that we got from him, and then we'll start wrapping up.
If I look at Asian emerging markets, it's really India and ASEAN, which have outperformed significantly this year. In fact, on a dollar-adjusted basis, India is just about negative. It's kind of almost teetering on the edge, one could say. And there are some other, ASEAN markets like Indonesia or Singapore, which have actually given positive returns this year. I think in the short term, the valuations are looking a bit stretched, especially when compared to the rest of Asia. But as I said, I mean, market loves growth. Equities are geared, equity investors, they love growth, and wherever they can see earnings growth, wherever they can see earnings estimates being revised upwards, those are the markets that they will flock to. So, over the longer term, we are still not budging from our, overweight stance on India.
Okay, that was BNP Paribas. Let's start wrapping up the market action for the day then. Today was a day of profit taking, no two words about that, especially considering the first hour when the market opened with a bit of a gap up, and after that, through the day, there was some profit taking, as you can see on the screen. It's more pronounced in the bank Nifty actually, more than the Nifty. The Nifty is ending down about 21 points, but let's just pull out the intraday chart on the bank Nifty as well, and that's where you will notice that, there's a sharper decline that you have over there. Bank Nifty is closing at the low point of the day. In terms of individual names, the big drag on the market came from, some of the consumption names like Lever, Asian Paints, banking names like Kotak and Axis, HDFC Bank as well. ITC was down, HDFC was down, Bajaj Finserv was your top loser, down 2.5%. Tata Consumer and Britannia, UPL, Nestle, these are a few stocks. Infosys as well, down about 0.5%. So these are a few big stocks. On the way up, Reliance clearly stands out, 1% higher on that. That sort of batted for the bulls. Apollo Hospitals, Bharti Airtel, NTPC, then of course Shree Cement did well, Cipla, SBI Life were the other stocks. But the broader market did well, Nigel.
Well, that's right. The broader markets did well, and there were plenty of stocks that were dancing around here. Jindal Photo, we don't talk about that stock very often. More than 5 lakh shares on a single exchange. Stock was locked up with a gain of close to around 20% on. Mirza International, one of those stocks that have disappointed numerous times in the past, but the street seems to be liking the corporate action. I think they're splitting both their businesses. Ahead of that, that stock was up more than 10%. Saturn Credit Care as well, the stock was up more than 10% in trade. Rossel India, remember in the past, the street didn't like that they were diversifying too much. Well, that one as well did pretty well, was up more than 10% in today's trading session. A couple of these smaller, sugar companies, whether it was the Shakti Sugars of the world that did pretty well, you had Simbaoli Sugar, that was up close to around 10% as well. And from the education space, you had S. Chand as well, that did pop up in today's trading session. From the auto ancillary space, LG Balkrishna's, well, that stock was up close to around 9%, and that one was flying away, in fact, particularly in the final hour. Giving it company on the upside in the final hour was Finiotex Chemicals. That stock did spike up. And another one that's ending, perched at the high point of the day, is Amy Organics. Good move is what we've seen out there. Stock did end with a gain of close to around 5% or thereabouts. So to wind things down then, the Nifty ended more or less flattish with a bit of a negative bias. The mid-cap index, though, that was where the money was. That ended high with a gain of close to around 0.5% odd. Advanced decline ratio, well, even Stevens out there, close to around 1,400 stocks on the advancing as well as on the declining side. For the time being, we'll wrap up on this edition of Closing Bell. But on the other side, our special show, Inside Out, comes up. You stay with us.